Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Brian Curtis along with Doug Krisner. Join us each day for the stories making news and moving markets in the Asia Pacific. You can subscribe to the show anywhere you get your podcasts and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Chip makers Nvidia and Advanced Micro Devices are squaring off in the fight to control artificial intelligence. We have more from Bloomberg's Joanne Wong in Hong Kong.
The two company CEOs fleshed out their different takes on AI at the world's largest computing conference in Taipei. Nvidia's Jensen Huang headlined his presentation by teasing a new Rubin chip envisioned for 2026. He spoke about the company's dominance in generative AI. AMD's Lisa Su focused on the design of neural processors that run AI services directly from laptops. She matched Huang's annual upgrade timeline by announcing new chips for 2025 and 2026. Delegates said Huang's performance drove home Nvidia's dominance and that AMD has a long way to go to catch up. In Hong Kong, I'm Joanne Wong, Bloomberg Radio.
Joining us now on the program is Daniel Newman, CEO of the Futurum Group, with a closer look at the Computex tech show in Taiwan, which is turning out to be quite the show, Daniel. We not only heard from Jensen Huang, who cheated a little bit and went early before the keynote from Lisa Su, and then you also had the Qualcomm CEO, Cristiano Amon, and then we've got Pat Gelsinger coming up later this morning. I think one of the key questions for everybody coming out of this will be, is there any sign of Nvidia peaking in the selling of these AI accelerator chips, or is that a long ways in the future?
Look, I think there's a significant opportunity right now to consider how much front-loading the market is doing in terms of all this CapEx investment and how much of this is going to be sold through, how much of this is being used. We've got 5 hyperscalers making up a big component of NVIDIA's overall revenue. But having said that, the company has what seems like a multi-year, if not nearly a decade lead in some of these accelerated compute capabilities. And they really did a good job at this particular Computex reiterating that one-year cadence. They teased out the Rubin and the Rubin Ultra. And I think they really cemented for both their investors and their customers that they have a plan to really stay the course. Of course, hearing from the other side, Lisa Su is saying, hey, don't count us out yet. I expect that Pat Gelsinger is going to say the same thing today. So on the data center side, NVIDIA's got a great advantage, but it does have concentration with customers, and it is really still pretty early innings.
So if NVIDIA is being so aggressive, Daniel, as to upgrade AI accelerators every year, how costly is that? That's a pretty expensive endeavor, I would imagine. Am I right?
Oh, yeah. So, you even saw Elon Musk tweeted out something yesterday that kind of talked about how he is intending his CapEx between moving generation to generation from his H100 cluster, which is one of the more recent advanced NVIDIA chips, to their B200s, and how many he intends to buy. He also put $1 and a price tag next to it. They could see just the billions of dollars by a single company in order to invest in having the AI capabilities that they will need to lead a market. A year over year is going to put companies in position, whether it's an AWS, whether it is a Microsoft or Google, in a position to decide when do they invest, when do they also invest in their own homegrown silicon, which many of these companies are doing as well, but they're going to have to stay up to date to compete. And of course, AMD and Intel and others want a piece of that. And NVIDIA is winning the market, and it's going to be hard to take away later.
And they're just minting cash. It's very interesting, curious what to do with all that cash. But it's also on the other side, in terms of all those people buying, he's got a catchy phrase that Jensen Huang does, that he rolled out a number of times recently, which is the more you spend, the more you save.
Yeah, I mean, look, he's looking at how much accelerated computing can add capacity, drive efficiencies and productivity inside of businesses. And of course, we're seeing that move now from the data center to the edge. And interestingly enough, in the Computex capacity, this show's been all about moving it to the edge and onto the devices. So you're seeing Qualcomm, Microsoft, AMD, Intel. So the data center, Jensen's really has that in a good place right now. And Intel and AMD are going to fight. But at the edge and on these PCs, it's actually much more exciting, seeing what Qualcomm's doing. And Microsoft is sort of minting in king-making right now a little bit with Qualcomm and its new architectures. And of course, Intel and AMD there again are trying to fight to keep up and stay in this conversation.
Speaking of conversations, Daniel, I'm curious about the conversation around diversifying chip production out of Taiwan. Is that do you think, high on the mind of a lot of people in the industry?
I think it's high on the mind and by a lot of people here. Sorry, I'm in Taiwan today, but in the United States, I mean, it's definitely top of mind. Having 0% of our leading edge capacity manufactured, there's a lot of geopolitical and macroeconomic risks. I mean, our partnership with TSMC via our various fabless makers is strong. They all value that relationship very much. But the CHIPS Act, the $50+ billion spending to not only support Intel's growth, but also TSMC and Samsung and others to build capacity in the US is critical, because there is too much risk, and the entire economy right now seems to be determined by how fast we could move in silicon and semiconductor advancement.
So it seems like you've got some companies that are really at the forefront for all of this. You can correct me if you think I'm wrong, but Nvidia's at the top, and you've got Broadcom, which is in there. You've got obviously AMD, TSMC. I mean, those four right there are just, sort of in insane positions. Microsoft, because it can come up with applications to interact with basically the enterprise sector, and maybe Meta with the consumer sector. The one thing that I'm curious about with Microsoft is it had a great quarter, the sales and profits, but the stock has been down over the past couple of months. And you wonder whether or not that's because, it's got this weird relationship with OpenAI. It turns so much of what's happening in the future to OpenAI, but it doesn't control the company. It's not part of Microsoft. How delicate is that?
Yeah, well, you've seen some of the comments from Satya Nadella about sort of how deeply entrenched it is with OpenAI. And of course, its products have been embedded, and its ability to advance the Copilot across its enterprise and consumer stack has been somewhat prolific, how quickly they were able to get this into market. At the same time, I think there's two things really at stake here. One is, what does Microsoft need to build on its own? I think you saw recently they started launching some of their own large language models. They've discussed building more of their own large language models and small language models for enterprises. And that's a big stake. And then, of course, on the other side is, there's been a lot of controversy around Sam Altman. You've seen top lieutenants of the company leaving, citing concerns about the company's privacy and security and trust. And this has brought question marks. Of course, Microsoft tried to be and focuses on being very ethical, very progressive that way under Satya Nadella's leadership. And there's all kinds of controversies right now. And it seems to be following Sam Altman. And I think they want to hedge that. And so I think to some extent, Microsoft has to hedge that. And I think they're doing it, with the excitement around Copilot Plus, with building OpenAI and Azure and their own models of democratizing models, bringing in third parties, building their own silicon. And I also think to some extent, right now the market's a little tough on software, but I do think the market's kind of getting that one wrong.
What do you think the market is overlooking, or maybe not focusing squarely enough on when it comes to the application of artificial intelligence? Is it how it may impact drug development? Is it management of the electrical grid? What is it?
I think the long term, we are seeing it largely correct. I think right now the market has a little bit over rotated to hardware. If you actually look at a lot of the deep value that's in Nvidia or AMD, it is in the software. If you look at what these new AI PCs coming from Microsoft, Qualcomm, and others, it is the software that makes these things possible. But also you look at enterprise software last week, you looked at the sell-offs of Salesforce, you looked at the sell-offs of ServiceNow and these other companies. These companies have hundreds of thousands of diversified customers that are in sticky contracts where AI is going to add value. But I think the market's uncertain of how much does software add net dollar retention and value to a customer versus how much AI has to be baked in just to keep a customer. And if the market can show some clarity there, I could see more dollars rotating to software because they're just very durable. And I think they're getting kind of the wrong deal right now.
I've been thinking about that a lot in the past couple of weeks, seeing those huge sell-offs and wondering whether or not software might be an interesting place for investors to think about deploying money going forward, at least over the next quarter.
Yeah, I mean, the concentration of these hardware companies and especially some of these chip makers, and I've seen data points that some of these chip makers like the Nvidia has, 2 customers generating over 10% of their entire revenue, 5 that's generating more than half. That doesn't mean it's not an incredibly valuable company with a great product. But like I said, you look at an Oracle or a Salesforce or a ServiceNow, 50, 100, 200,000 plus customers that really can't pivot. So AI is going to get added. They're going to be able to charge for it. And I see a lot of value in that, but I don't know if the market is seeing clear, concrete value from AI. And everybody wants to say your growth, your margin, your expansion, your revenue is somehow tied to AI. And really, Nvidia is the only company really showing that right now.
Yeah, a lot of these stocks are down like 20, 25, 30%. It's a pretty interesting story. Daniel, thank you very much for joining us. Daniel Newman, CEO of the Futurum Group, with us from the Computex Tech Show in Taiwan.
Let's talk markets now with our guest, Robert Schein. He joins us in the New York studio. Robert is CIO at Blanke Schein Wealth Management. Good of you to join us. Thanks for stopping by. I want to begin. We can talk about the macro, the Fed, all of it in a moment, but I want to begin with the election because I was struck today by the note from the strategist over at Morgan Stanley saying that this year's election has the potential to impact markets in a major way. And a couple of things may be at risk. One is the fact that we've got these macro trades that seem to be very popular right now. And the closer we get to November, Morgan believes there's a risk that they could get unwound pretty quickly. One is being long the dollar versus some of the other currencies that we talk about on this show, like the yen. The other is being underweight longer-term treasuries. Does the election have the potential to really rattle the market, do you think?
It's funny because every time we have every 4 years or even a mid-cycle election cycle, there's a lot of sides that weigh in, right? And there's a lot of money that's being shifted and moved around. If you look at election sort of calculus and the math today, it would show that Trump beats Biden, right? But we've got a lot of room to run, and there's a lot of stuff that could happen between now and November. And quite frankly, much like what we saw at the beginning of the year where everyone anticipated multiple rate cuts, all bets are off. Everyone's wrong, even the experts. Mm-hmm. So I'm almost inclined to take the opposite of this trade, the counter of this, simply because you could have the Fed conceivably rate cut back end of the year, right? What does that do to the dollar? You could have a lot of different sort of aspects that will play out that are completely unknown. While it feels good to make that trade or that call right now, if you look at the baskets, if Trump were to win today, those baskets of stocks, if you will, a lobbying basket, what I'm referring to, of stocks that would benefit if he was in the office, are doing better than the Biden index. The strategist puts up a great piece as it relates to that. But it's bounced around back and forth, and it's as volatile as anything else. So as much as we'd like to say, okay, this is sort of the way of proceeding, I'd be careful.
One of the interesting sort of inflection points that we could talk about is it appears the market is switching its concern from sticky inflation to growth. It's kind of a combination of the data that we've seen, manufacturing weak, consumer spending weaker than expected, labor with a few notes of caution there. It's not exactly a growth scare yet, is it? But is that where we're heading?
Yeah, we were just talking before we got on the radio just now, which is, right now we're in that sweet spot of bad news is good news for the equity market. But when does bad news become bad news for the equity market? As we're seeing with the ISM, you could, tease out some good information from it, but it's a softening economy. And I think, but we were also discussing, if you travel around some certain cities, there are some booms and bustling and everything that we're seeing, and it doesn't meet the eye. And then you add in, I know it's the story of 2024, and it will be for 2025, but the AI. I mean, if you look at what AI is contributing, and what everyone has to do just in the S&P 500 to increase their CapEx spending, it's a game of war right now with regards to everyone has to play catch up. And everything that they had set for okay, let's be conservative and cautious. Everyone, the primal spirits are playing out right now with all the competition.
The question is on ROI in AI. Do you expect that?
It will, but not from a profitability standpoint sooner than everyone would like it to be. I mean, they're gonna overspend and outspend, and quite frankly, aren't they just buying chips and sitting on them?
Yeah.
And that's just to keep your competition on the sidelines. I mean, that's what's happening right now. So, but if you have the war chest, the cash to do it, which we're seeing certain companies are doing it, you're basically, sitting on your little brother while you're taking off, for the races. And, everyone's going to say it's unfair fight, but when has it not been?
So I don't worry that much about rates at the moment because I'm focused on earnings. That's one view. And so if you look at the three important areas, Robert, for investors when they're looking at stocks, you've got earnings, valuations, and then the macro backdrop. Rank them in order of importance for you at the moment.
It's funny you say that because it depends what week we're in. Right, start of the year. At the beginning of the year, it's the Fed and interest rates would run that week, how we would finish on all indices, and now we're looking at AI and AI spend, and so that would then be the trend. And so last week it was the Fed and sort of the soft numbers that we're getting economically. I think at the end of the day, both of those are important, but earnings is number one.
So I'm curious as to how you're viewing markets offshore right now. We may get a rate cut from the ECB, and you could make a case that Europe right now is showing signs of maybe modest recovery. Do you want to pull some money out of the U.S. and it be more exposed to other parts of the world right now?
Yeah, it's mixed in terms of the recovery in Europe, right? Places like Germany are still kind of pulling out of it. But then Japan and India show signs of strength. So, you would definitely want to take an opportunity to see what's out there internationally speaking. And we do that for our clients. We're always looking for those opportunities. But it broadened the portfolio, look for opportunities internationally. And the U.S. conceivably is going to be the last to cut in this rate cut cycle. So we're seeing that, play out.
The Fed on hold seems to now be the best scenario. Both cuts and hikes cause concerns. But as Doug asked you a question about one trade, which is, dollar strength, and maybe that turns around. For international markets, what would they want to see from the Fed? They'd probably want to see some cuts, right? Get a weaker dollar?
Yeah, everyone wants to see cuts, and that's the challenge. And even the Fed knows that, and they have to be. When I was in the studio right before Christmas at the end of the year, I said higher for longer. We positioned our portfolios for our clients higher for longer, and that was everyone's asking me, well, no, we're looking at about 4 or 5, maybe 6 cuts for 2024, and the reason why is because 87% of the time, if you look at the last waves of inflation. There's always been 2 waves, and that's what the Fed has to do. They have to hold as long as they possibly can for fear of inviting inflation in, right?
So talk to me about how you're balanced right now on the equity side versus fixed income. Maybe it's kind of up to each investor, each portfolio. I mean, I'm sure that's a very specific ratio, but broadly speaking, what's that balance in your mind?
Ideally, in a market like this, we like 60% equities, 30% fixed income, and 10% alternatives. Alternatives are looking really attractive in the private markets, especially the ones that we've been able to source. But alternatives might not be right for everybody. But for the most part, a balanced portfolio, 60-40 overall, is a good mix right now because the fixed income, again, is sexy again because it's paying you 4.5%, right? Yeah. And also, once we see volatility return in the equity market, because we really haven't seen that, we usually strategic rebalance, which means we'll take out of maybe the treasuries that we're sitting on, clipping 5%, and then buy some equities that are down 10, 15, 20% that
with
we like.
With the cap gain, right?
Big time.
Yeah, well, let's talk a little bit about those alternatives as well that you just mentioned. Sometimes people put property in there. You don't have to, but what looks best among the alternatives for you?
Yeah, we avoid, we're from California in terms of most of our clients. And so most of the clients made money in real estate. So really, when we look at an asset allocation for a client, we take in a big picture consideration of their portfolio. So we don't need to add in private real estate, if you will, because most, if not, have their own private REITs that they've accumulated or commercial that they've built for many years. So we avoid the fixed, the real estate side of the private equity. Mm-hmm. But there's others out there that have really cracked the code of diversification within private equity.
We'll leave it there. Robert, good of you to join us. Robert Schein is the CIO at Blanke Schein Wealth Management, joining us here at the Bloomberg Interactive Broker Studio in New York.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
Hi, everybody. Good morning from Hong Kong. It is 9:43 in the morning here, 9:43 p.m. on Wall Street. Time to check in with Bloomberg Opinion. We're joined by opinion columnist Karishma Vaswani, who is writing about Tiananmen Square, the massacre there 35 years ago in 1989, with a piece that says, China wants you to forget Tiananmen. Don't. So nice to have you with us, Karishma. So many around the rest of the world may have moved on to a certain degree from the massacre. In some sense, it was kept alive by the annual candlelight vigil that we had for so long here in Hong Kong. But it is no more, and it's not coming back. The consequence of that.
Yeah, I think it's really interesting, the fact that this won't be taking place in Hong Kong, as you point out. It was one of the main places post the massacre that happened in 1989 where people could commemorate those who had died, and the moment where just briefly it felt like China, was going through this really momentous period where young people were demanding freedom, hoping for a different kind of country that they wanted to create. Now that cannot happen anymore under the national security law and Article 23. Those sorts of protests, or rather demonstrations, I should say, have effectively been stamped out. My understanding is that where these annual vigils used to take place in Victoria Park, there is a pro-Beijing group that has organized a food carnival that is taking place there instead. And so the focus now falls to Taiwan, which has become the de facto inheritor, if you will, of these kinds of demonstrations, and large ceremonies are planned there today, but also around the world. I was speaking with former student leader from Tiananmen, Zhou Fengshou, and he was saying to me that because of what's happened in Hong Kong, what he described as the deteriorating environment there, this has become an even more live issue. And so he, when I spoke to him, was on his way to a rally in London. There are, opportunities for people to go and pay their respects in other big cities around the world. So I do think 35 years after this has happened, it is becoming a fresh issue again. It is becoming part of the consciousness again.
It's so amazing to think back to 1989, and 5 years after this horrible event, the trade relations between the U.S. and China and how they began to deepen and would only grow through the inclusion of China into the World Trade Organization. And I'm wondering whether there was a missed opportunity on the part of the U.S. Could the U.S. in any way have had an impact on this history?
Look, I think it could have. And, there was this belief at the time that if a country becomes richer, it becomes more free. And that has not been the case, has it? And I think there was a real opportunity there at a time when China was not the world's second largest economy, has not amassed the kind of wealth that it has today, where perhaps the United States and China could have worked in some shape or form, perhaps that sounds idealistic, to find a way through and address some of those issues. But that didn't happen. And in fact, a lot of student leaders from that time and human rights activists point to that as one of the big failures of the U.S. administration at the time for ignoring some of those things in favor of economic development and economic growth, which then, as you point out, created this hugely symbiotic relationship between the U.S. and China, which, it, in effect, exists still today, and that has been so hard to unpick, and it's what you're seeing as the result of the trade tensions between the two sides. In that time, the Chinese Communist Party has become even stronger, had more control over China, particularly under Xi Jinping.
You open your piece with the Orwell line about who controls the past controls the future, who controls the present controls the past. In some ways, it's kind of like saying that the winners write the history books. I'm curious. I mean, obviously, China writes its own history books, but doesn't control the history books around the rest of the world. Will historians look back over this, and will they say that the students overplayed their hand back in 1989, almost like some would say the students and the activists overplayed their hand in Hong Kong between 2014 and 2019?
I think that's a really, difficult parallel or question to answer, simply because if you're a student at that time, both in 1989 and, on the streets of China, and I watched their interviews again, and I was struck by their enthusiasm and their hope for this idea of wanting to create a different country. I mean, in many ways, they were patriots, right? They wanted a different vision of their homeland to materialize. And I don't think anybody had a particular strategy when they were going about doing that. They were just really passionate about their cause. And it's the same thing in Hong Kong. When I've spoken to student activists or protesters and demonstrators there before, there is just this real desire to ensure that what they want achieved is something that they can see in front of them. And, did they overplay their hand? Did they, were they not strategic enough? Perhaps. And perhaps that's what the history books will say, but I don't think you can fault them for trying to change the way their country was run.
Karishma, very quickly, what is the risk if Taiwan does indeed become the focal point for remembrance of Tiananmen?
Well, I think the risk for Taiwan is it continues to be a target of China's. Over the weekend at the Shangri-La Dialogue, we heard that from the Chinese defense minister. So that's the risk.
Yeah. All right, Karishma, thanks so much for joining us. Bloomberg Opinion columnist Karishma Vaswani. You can read more on this and other stories from Bloomberg Opinion at Bloomberg.com/opinion and on the terminal by typing OPIN. Go.
This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.